Hey everyone, and thanks for jumping back into the cryptoverse. This is your Tuesday update premium video. Hopefully you enjoy the content. We're just going to take a tour of some of the charts today. I know the market's relatively boring right now, but if you think about it, it really does make for a fairly simplistic strategy that I would argue continues to show itself to in fact be the best strategy. Um, but again, I mean, even with all that said, it is worthwhile to check in on the indicators, see what they're saying, but also to not really lose sight of sort of the macro picture as well. So I wanted to mention, and I mentioned this in the Telegram group earlier, it's that I'd like to at least acknowledge when one of the bottoming indicators flashes, right? And we've had a couple of them flash already. Ideally, you would want to see confluence, right? You'd want to see like all of them flashing, not just like one or two of them. Um, there's really a good chance, especially given the macro environment that we're living in, that a lot of these will eventually flash, even if they haven't flashed already. But one of the ones that has recently flashed is the hash ribbons, okay? But specifically when you don't include price momentum. And I want to talk about that a little bit and why it has been a little helpful to include price momentum when looking at the hash ribbons. So when you don't include the price momentum, which is just, by the way, I mean, everything's defined down here. If I ever say something and you're not really sure what it means, it's usually defined down here. It says the price momentum. It's just the 10-day price SMA divided by the 20-day SMA of the price. So it's just adding it in. But if you just look at the hash ribbons, which is the 30-day divided by the 60-day, here you can see hash ribbons, the local bottoming indicator based on the hash rate. Okay, just the crossover of the 30 and the 60-day SMAs. But what you'll see is that it is recently flashed, right? The hash ribbons have recently flashed. Now, when we talk about something flashing, it's always worthwhile to see what has that historically meant when the hash ribbons flashed, right? And when you don't include price momentum, you can see where they've previously flashed. When you do include it, it's somewhat different. Now, when you don't include price momentum, you can see that they also flashed in April of 2021, right? And this is, I mean, I certainly did not use the hash ribbons to justify holding Bitcoin. As I said back then, I sold off 87% of my Bitcoin that was in long-term capital gains territory. 87%, mind you. Even though people were talking about the hash ribbons. So I certainly don't take that one to the bank. But there are occasional times where, in the midst of a bear market, once it flashes, in 2018, it meant the bottom was already in. However, in 2014, 2015, it looks like it flashed in late 2014. But when it flashed, the price of Bitcoin was at 320. It still dropped another 50% or so. Okay. So that is why I do think it's worthwhile to at least look at what this stuff has meant in the past. In 2011, you can see it didn't flash until really late 2011 after the bottom was already in. So two main examples after a bear market. One of them is still about 50%. But with that said, this is one of the reasons why we've added in price momentum. Okay. Now look what happens when you add in price momentum. These lines here in April, they disappear, right? They're no longer there anymore. So there was no hash ribbon signal over here in April of 2021. You got one over here, right, in August, and arguably we saw new highs, right? Like it did technically lead to a new all-time high, even if that actual, that sort of that final leg was a somewhat mitigated run, probably due to the overwhelmingly bad macro conditions. But it still flashed nevertheless, and we did go to a new all-time high. And then if you look back to see when it flashed, when including price momentum, you can see that in 2018 it occurred just after the bottom. You can see in 2015 it occurred just after the bottom. And you can see in 2011 it occurred just after the bottom, following those longer bear markets. Okay, so I look at this chart and I say, well, you get a lot of flashes of it in the bull market and in the accumulation phase. Okay, so just because you see it flash doesn't necessarily mean, well, it doesn't necessarily mean anything per se, right? But it certainly doesn't necessarily mean we're going to have a V-shaped recovery. What it meant in 2015 was that the bottom was finally in and that we were just going to go sideways for a year. Okay, in 2018 or in early 2019, it meant we were largely going to go sideways for a year, but with actual, a bullish bias for a few months and then a bearish bias for a few months. But ultimately, it was more or less sideways, with some tolerance there. I mean, I don't want to discount the 2019 move. It was an actually decent move. I mean, a lot of people here, I'm sure, would love to see a 4x right on their portfolio, which is essentially what we saw back then if you were just heavy Bitcoin. Um, but when looking at it with price momentum, it has not yet flashed, right? We haven't seen that flash of this indicator with price momentum. So without price momentum, we have it. It's given us that signal. But again, comparing to prior times, it's not always the best signal, but it has some sporadic success. Whereas with the price momentum, um, its success rate does tend to be a bit higher. Now, of course, there are some examples over here where it flashed. We went up for a little bit and we had the drop during the pandemic. But arguably, once you're past the bear market, you should just basically expect these to flash for a while throughout the accumulation phase and into the next bull market. Okay, so with all that in mind, it's useful to look at these indicators, these bottoming indicators, and to say, yeah, like it is there. Be nicer if it also included the one with price momentum as well. Okay, because we see that it has a mixed track record, without price momentum. Now, the bottoming indicators, there's a lot of other ones, of course, we could talk about. There's still things like the terminal price, or at least where the price of Bitcoin goes below the balance price, has always marked the bottom. That has not yet occurred. So we'll always mention that when looking at the total value versus the trend, the total crypto market trend line. You can see that we're still not to the levels of undervaluation that marked prior, at least the 2015 accumulation phase. We are to the level that marked the 2018 accumulation phase with respect to the fair value, but ultimately we did go much lower eventually. Which is why I do think, especially when we talk about altcoins, I still think it makes sense to have some Bitcoin, but I would argue that stacking cash does remain priority, but that in terms of altcoin accumulation, you really would like to see it closer to the total asset class being closer to 65 to 70% undervalued. That really is where the historically anyways is the best time to pick up altcoins. And there's a good chance that while Bitcoin going down could contribute to the total to this continuing to go down, there's also a good chance that a lot of that could just be made up of altcoins going down, and Bitcoin maybe not going down as much. It's just something to consider. Now, there are a few other bottoming indicators. I mean, we can always talk about the risk levels and see where that is. And to always note that, the 0 to 0.2 risk band, of course, is a historically good time to acquire a position in Bitcoin, sort of blindly, for a year or two and just kind of be patient. With that said, I mean, you can see that normally when we come to this area, we spend some time there. We don't normally just have something like what happened in March of 2020, where we just have a V-shaped recovery out of it. You usually spend a significant amount of time in these levels, and ultimately, a lot of times you see lower prices for a while too. So that is one that is in the process. It's getting closer. We're building at that base of blue dots, but still seems it's relatively early. The running 1 year ROI, again, I mean, it's still at 0.6 right now. You're likely going to see this continue to drop as we get closer to the end of the year. Think about like November timeframe when we're comparing it to 69K from the year before. You'll likely see this come even lower. So, really when looking at a lot of these indicators, some have signaled the bottom. Some say, yeah, like it could be, but certainly some suggestions that it could go lower. You look at like the MVRV Z score, and you can see where we currently are. Major bottoms have been just a bit lower than where it is right now. And then one of my favorite charts, and I think one of your guys' favorite charts too, is supply and profit and loss. Normally the bottom comes once after they cross. Still haven't crossed yet. Could even apply a moving average to it to maybe smooth this out just a little bit, and to see that bottoms normally occur once you see these sort of cross and dance for a little bit. And we still have some, we still need some time for ultimately that to play out. Okay. So, at the end of the day, a lot of indicators, 2 or 3 of them, a couple here and there have made some signals, but for a lot of them, they're still saying that there certainly could be more downside to come. And I think when you talk about, say, like the ROI after the market cycle peak, and you look at where Bitcoin currently is normalized to prior bear markets, I mean, like this could be a boring phase for a while. Not to I don't want people to just like lose hope, but I mean, look at these prior bear markets. This is a really a grind, and it can be hard getting through this phase of the bear market. You know, especially if we get into this rut where we go sideways. I mean, right now it just seems like we're stuck around 20K plus or minus a couple $1,000s. Anytime we go above 20K, everyone's got a kick in their step. They're kicking themselves for not buying more. Then every time we go below 20K, everyone's talking about what their price targets are to the downside. But again, I mean, looking at prior bear markets, we know, there can be phases where it just gets relatively uneventful. One thing I talked about in the Telegram chat earlier as well is that US dollar currency index. And this is something we've talked about for a while. And we've followed this double bottom over here. And actually, going into early 2021, if you watch some of the videos back then, we talked about the dollar potentially putting in this double bottom here like it did in 2018. And ever since then, it's absolutely gone parabolic off that double bottom. And we're seeing this, this surge. Like I was saying before, I don't really think that obviously it is played out now, but I mean, we said this even weeks ago that I don't think it's going to stop at 104 just because it did a couple times before, but that ultimately we're likely looking at a move at least back up to the top of this trend line, which could get us all the way up to 115 if it were to happen soon. Obviously, the longer it takes, you can see this trend line going higher. Of course, don't marry a trend line. We know they're made to be broken, but just in terms of looking at something like this, you can see what it ultimately looks like. And where we easily could be headed over the coming months for the U.S. dollar currency index. So, my guess is that the next bull market will in fact be when the dollar is going back down. But it could look something like this, right? Maybe the dollar is going to go up for a while and spend some time up here, and then the next bull market comes when it comes back down to the trend line. Or maybe it comes up here and then breaks out, and the next Bitcoin bull market is when it backtests this trend line, right? If you go look at DXY, we have it color coded by the Bitcoin risk level. And you can see again when the dollar's in those parabolic uptrends, Bitcoin risk tends to go lower. Okay. As long as you don't lose sight of that larger trend, you can ride it for as long as possible. And one of the things that I've often seen some talk about is, well, if the dollar's in a parabolic uptrend, and you have things like the risk on the dollar, really, really high, doesn't it make sense to buy altcoins or something? And I've said before, remember these mania phases for these, they can last for a while. Think about what happened with Bitcoin. It lasted for like a whole year basically once it got up into that upper range. Obviously, we didn't stay in the 0.9 risk level that long, but the dollar can stay in it for a while. It's not like Bitcoin where it just goes there for a couple of days and then leaves it. So one thing to consider, though, is during these parabolic rises by the dollar, those that have been stacking cash for the last half year, I mean, you're doing among the best that you can. I mean, yes, there are some things that have outperformed. We talked about some of those in prior videos. Like there's a lot of the energy sector has done fairly well. And not all of the energy, not every part of the energy sector, but certainly a good portion of them. And I know a lot of people have diversified portfolios where they've noticed the energy part of their portfolio doing relatively well recently. We've talked about how you can hedge with commodities and whatnot, and even some energy funds. But for the most part, other than a few sectors like that, holding cash has been one of the better plays that you could make, even though we know inflation is sky high, right? Like we know inflation sucks. But if the alternative is just throwing it into assets that are just constantly depreciating in value, then it's not necessarily that bad. It's just ultimately something to consider. If we go take a look at our indicator dashboard, you guys know I like to check in on this. And the summary risk is now down to 0.153. The reason it's not lower is because the social risk is keeping it elevated. If you turn the social risk off, you can see that this comes down significantly, right? It comes down quite a bit. And the social risk in and of itself is still coming down. It's now at 0.336. Okay? You can see that it's just going to take some time to get there, but the destination seems pretty clear. And I get a lot of people don't really like the fact that I talk about the social risk because you don't really think it's that important. However, my argument back to you is that out of all the indicators that we have, one of the only indicators that still suggests that 69K was completely in really risky territory was in fact the social risk, right? I mean, it had the social risk at these elevated levels even in November, right? So to completely discount it because it's a new thing or you don't believe in it for whatever reason, I would be somewhat open to it, considering that it's one of the few indicators that actually shows this as a double top. And actually, you can turn some of these off and get an even better look at this. I mean, like if you turn some of this stuff off, look how clean that looks. Like if you just look at Twitter analysts and Twitter exchanges. So this is someone else posted this in one of the Telegram groups. So I was looking at it, but if you just turn these two on and leave the other three off, it gives a pretty clear signal here, does it not? So what I'm looking for with regards to altcoin accumulation is I want the social risk back down here. And the reason is because a lot of people tune in to the cryptoverse because they want to see what their favorite altcoins are doing. A lot of people don't really care about Bitcoin because it doesn't really move as quickly as they want it to. It doesn't necessarily promise as high of returns as some of the altcoins can promise. But you show me a social risk down here, and I would bet that a lot of altcoins are going to be completely devalued in terms of where they once were during the bull market. Okay, a lot of altcoins are down significantly, over the last 7 or 8 months. And against Bitcoin, they're down. A lot of them are down even more, or maybe not even more, but they're down a lot. Um, so I would look at these types of charts and say, yeah, like maybe it's not the best indicator, but if the social risk were to come back down to these levels, which it seems like it's going that direction, that would be a more convincing time, I think, to get altcoins rather than buying dips during, altcoin dips during a bear market. And I mean, of course, it brings up the Bitcoin dominance and the fact that it's still at 43%. Again, I know that we're kind of growing old waiting for this, and I know not everyone even believes that the dominance is going to go higher. But I can't help but look at this and just think that it's ultimately just putting in a higher low. I know I'm stubborn on my view here, and I could be proven wrong, but I would still argue that this is just somebody putting in a higher low. And if you look at some of the assets that we follow, like ADA Bitcoin, it still seems like it's getting rejected off its 200-day moving average, which is ultimately what I think is going to happen. I think it's going to get rejected off the 200-day, regardless of the direction that Bitcoin heads. There are some others, like you have AVAX Bitcoin. It's now seen a nice bounce off of its lows. Solana Bitcoin has seen a nice bounce off of its lows, and a few others as well. But I still can't help but think that these macro trends on these Bitcoin pairs are still looking downward, right? So, and frankly, a boring time around 20K could lead to that, right? That could certainly lead to something like that playing out. But anyways, we've covered a lot. I hope this has been useful. Leave a comment down below. We'll do the Thursday AMA, and we'll try to answer as many questions as we can. All right, guys, thank you for tuning in. I'll see you next time. Bye.